Welcome to Markets Now. I'm Michelle Rook along with Jim McCormick with agmarket.net. Post the USDA report, we are seeing grain steady to lower over in the livestock futures, cattle mixed, and hogs have been trending a little bit lower here today as well. But Jim, let's talk about the report. First of all, we did get a lower yield number on corn by almost 2.5 bushels per acre, ending stocks down slightly. I guess the question is, though, USDA lower demand as well. So how hard is it going to be this season to get below 2 billion bushels on ending stocks?
Unfortunately, Michelle, I think it's going to be very, very tough. I mean, this is a dance the USDA, I think, could be doing all season long. They will lower the yield. They're going to turn around, lower demand. Exports have picked up a little bit for corn right now, but the reality is they're still way behind where they should be. China was a big buyer of U.S. corn last year. At this time, they bought virtually none. We're just not very price competitive. So I think, unfortunately, as this crop gets smaller, the demand offsets it. It takes carry out over 2.1 billion. And, if that leaves you around a 13% stocks use, Michelle, historically, that is not $5 corn. That is prices closer to low fours with a stocks use and that level. So I think in general, this market's going to struggle to rally unless we just find out as the combines hit the fields, the crop's not there. But as the government says right now, that's just still be one of the best crops ever.
Yeah, the second largest, I think, that we've had on record. So in your mind, though, is the crop getting smaller? Is the yield getting smaller, or is it getting bigger? Or is, like you say, we won't find out till the combines roll?
Right now, I would, if I got to make an argument right now today, I would argue it's probably maybe getting a little bit bigger on the corn side on test weight, plain and simple. We haven't had a lot of heat recently. We've had a lot of moisture move through the Midwest. We had some big rains last weekend. You got some more rains coming in. Part of Iowa got some drier portions of Iowa got some rain. That will add test weight to the crop, and that tends, that adds bushels, pounds. So yes, I think in general, the corn crop is probably getting a shade bigger with the near-term weather.
And let's talk about soybean yield, because dropped 1.1 bushels per acre. But this survey was actually taken before we had those big rains that moved through the soybean belt. So talk about what that means.
Well, exactly. What the survey did, they did the survey for the producers roughly the last 5 days of July and the first 5 days of August. So technically, this is number they printed as of August 1. We've had a lot of rain since then. We've had more rains coming in here this weekend. And in general, I think the trade's idea is this crop is probably going to get a little bit bigger. And even though, if you might notice what the market did, Michelle, we did have an initial surge higher when they printed that yield number, when the computers read it. But it was met with a lot of selling, at least initially, as I think producers are saying, hey, I've got a bean crop. If anything, it's getting bigger, and I want to take advantage of rallies to sell it, it looks like at this point.
So if that's the case, Jim, and yield does go back up, as we say, where do we need to be price-wise? Because what does that do to ending stocks and demand and those shifts around?
I think in general, unfortunately, it means we're probably going to go down because the beans are having the exact same problem corn is, and then maybe not quite to the extent. We have seen some bean sales recently, but in general, our bean sales have been lacking. The Brazilian crop has been a big one. China has bought some beans recently, believe more of trying to keep the grain shipments flowing, but we do expect that demand to shift back to Brazil eventually. And if you look at where we are, we're still $2 higher right now than we were in the early summer lows. So I think if this bean crop does get better and the demand does not materialize like I fear it won't, I think in general, the odds are, unfortunately, the beans are probably going to have that fall break that we normally see.
Okay, so you're talking about sub $13, maybe taking out that 1290 100-day moving average, that area, and that happens maybe after we find out August rains have made that crop get bigger.
Exactly. I mean, it may be we got some big crop tours coming up here at the end of the month. People will look and see how that does, and we'll see what that September crop report comes in and says. Because I think maybe you're going to see the sellers hold off just a little bit. Remember, this is more of a survey-based report as well as some satellite imagery. It is not boots on the ground. You might see the sellers be a little bit conservative until they're convinced that this crop is there and potentially getting bigger. But I think if it does get the conviction the crop is getting bigger, the odds are, unfortunately, they're going to be coming in and aggressively selling it.
All right. What about the wheat market here? We did see a little bit of an increase in ending stocks, 23 million bushel increase. And so maybe just slightly negative for the market, you think?
Slightly negative. They did lower the spring wheat as anticipated due to the dryness issues, but the winter wheat crop was bumped up a little bit. Nothing earth-shattering. The demand we've seen some decent wheat sales recently, Michelle, I think due to the conflict in Ukraine kind of escalating. But the reality is we're just not is super price competitive in the world market. And that's going to, that's going to be a kind of an anchor on the wheat near term as we try to stay competitively priced with the world market.
You don't think that at some point we will start seeing some of that business shift over to the United States? I mean, we haven't for the last 18 months. So I guess I'm asking that a little tongue in cheek, but.
You never know. I mean, the one thing I think I'm a little bit just keeping an eye on is we are seeing an escalation. The reality is the Ukrainians have hit a couple Russian warships. They've also hit a Russian oil tanker with some seaborne missiles or drones. If per se, Michelle, let's say they would start hitting a Russian grain ship, it could change the calculus quite a bit, and you could get some demand shift back to the U.S. or something like that. So something we got to be cognizant of. It's not happened, but they're unfortunately still at war, and war is unpredictable.
Yeah. So talk a little bit about overall demand as you see us moving forward, not just on wheat, but even on corn and soybeans, especially because we do have some global crop issues that are creeping up, especially in places like China. Will that translate maybe to some corn export business down the road or anything like that?
We're hoping it will. I mean, right now, China's got a lot of issues with flooding due to some, a lot of heavy rains and some hurricanes. We don't know the damages with China. China never tells us anything. Right now, though, unfortunately, we're just not overly price competitive in the world market with Brazil. And I think that's going to be the biggest problem down the line is China is buying our grain, I think, because they feel like they have to. But because of our political situation and the structure of how we are kind of at each other's throats, they've got that new grain deal to buy corn from the Brazilians that started late last year. I think the Brazilian corn is going to be their default purchase. So I think that is a problem down the line. And like I said earlier in the comments, if this crop gets smaller, I think the government, unfortunately, is going to lower demand, and the carryout's going to be a problem, unfortunately.
Okay, so if we have bigger carryout coming, what does this mean for livestock producers? Do they wait to buy their feed needs, especially when we maybe start putting in those harvest lows?
I would say in general, you want to put in, because of the uncertainty of what's going on in Ukraine, you get that harvest break. I would encourage producers to come in and, end users to come in here and maybe lock some of that feed cost in. As for beef specifically, it's going to be kind of interesting. We know the supply of the beef market is very, very tight. Michelle, we've seen that in these cattle and feed reports for many months now. The one question now is going to be the consumer. How much is he willing to pay? Credit card debt is now over $1 trillion for the first time ever. And the other thing I'm worried about right now is the student debt payment. That has been paused for many years now due to the pandemic. That is supposed to start coming back into play for those people. And the average payment is about $400 a month. So the reality is you have a lot of people out there that have not had to pay that payment. They're now going to come up with $400 a month to make that student loan payment. Where is that money going to come from? Is it going to come from their entertainment budget? Is it going to come from their food budget? Time will tell. But historically, I think that argues it's going to be a little bit negative in that they're not going to be going out eating those high-end steaks. They're going to have to cut that budget, and that could be a problem for the beef market.
All right. But even then, tight supplies maybe will override that. Is that possible? We're going to get into those tightest supplies maybe fourth quarter.
It could. I mean, that may just keep us more in a sideways range. Essentially, the bulls want to buy the tight supplies. The bears are going to want to sell the weak demand. That just may keep us more in a choppy sideways motion.
All right. Thanks for joining us. Jim McCormick with agmarket.net. That's Markets Now.